Hey everybody, welcome to another edition of Tuesday Talks with Ash and Angelo. I'm just waiting for Angelo to hop on and say hey so we can get started. Keep in mind, if anyone has questions, feel free to ask in the comments and we can answer those questions, either myself or Angela with Leverage Lending Group can answer those questions for you during our discussion today. We have a lot of stuff we're going to talk about today. We're going to talk about interest rates, the new Fannie and Freddie increase that they've put on inventory as far as homes that are for sale, and kind of what we're going to see, what we've been seeing the last week, which has been very volatile, especially in the mortgage industry, and what we can kind of try to plan for going forward. So, Angela is texting me. Okay, there we go. Yes!
What up, Ash?
I was like, hang on, Angela's texting me.
Yeah. Well, yeah, I sent that, and then I saw your little thing come down where I could join the live video. So, yeah. I'm just putting a couple things together, some potential talking points for today. Kind of what we had talked about earlier today. So, what's going on? What's going on in your world? How you been?
Oh, God. I've been putting out some fires. It's fine. That's kind of how we roll, which is,
right.
That's why I only kind of work with the amount of clients I work with so that I can give a really solid customer experience and be really involved with my clients.
Yeah, you don't want to, when I got super busy, I think we had talked about that. It was like, how do I continue to maintain my same service level? It was just, I had to bring somebody else on. So, you know what I'm saying? So no, I hear you. I definitely hear you on that. Cause it's all about reputation.
That's right.
So.
And we take care of our clients.
Yeah, for sure. Absolutely. We got a couple closings coming up here. Yeah. And so, yeah, we can talk about this later, but, what's the stats in the world of, I guess, home prices? Are we still floating around that 287 median sales price range?
Yeah.
What I've been seeing.
I was reading an article that was published by Redfin, and I know, I like to get my news from all sources.
Right.
Great technology team that publishes, I think, some really helpful information. They said that there was a 11% increase in year-over-year sales price.
Wow.
Yeah. And I'm really seeing that, like, boots on the ground,
Wow. So yeah, that's crazy. And I was in my networking group this morning, and there's a realtor that is at the lake that's part of that group. We don't do that much business together, but he was kind of giving some stats. I guess he put a house under contract on Thursday, and by Friday they had 22 offers.
Yeah.
It's insane. Like mind blowing. It's insane.
It's like, I posted a picture on Instagram, and it was like basically what it's like to be a buyer's agent right now. And like, one of them was like, this is what it was, last year or something. And they all looked put together. And then it was like, the span to the next picture, and their hair was like on fire.
Right. That's funny. Listen, we got a question. Do you have a notary in place? Well, for the closings that we're working on, the attorney is a notary. So, according to Cove, thanks for the question. And but I can actually give you a name of my title company down the hall that does mobile closings and needs notaries. So shoot me a DM and I can put you guys in touch with each other. So awesome. I'm gonna be in touch with you on that.
Very good.
Cool.
So a headline that I saw and we kind of talked about a little bit last week was this like the headline about the 1.99
Yeah. Yeah.
rate.
Yeah. It's so normally in, because rates are, you know, historically at all-time lows. Um, Rates are very great. They're very good anyways,
Yeah.
but a lot of times lenders don't put those super low, they don't put all their rates on their rate sheets. Okay. So with this particular lender, which is one of my main lenders, the wholesale, they put a 1.99 rate on their rate sheet. There's actually, I was searching before we hopped on this call. They even have a 1.875 rate, but there's a catch. It's not a catch, but it's not, that rate is 1000% not free. You are paying through the nose to get that rate. So yes, it's out there, but there's a cost to it. And I'll tell you what that cost is for that 1.99 rate with just my normal commission structure kind of built into the rate and all that. Based on a 287,000 sales price, 5% down, 272 loan amount. It is for a 15-year term. It's not for a 30-year. Okay. So
Okay.
I'm just so that rate is only available for 15s.
Wow, they don't do that part of it either.
Yeah, no, 15-year. Yeah, 15, 10, all that. Just the cost to get that particular rate, 1.99, is wait for it.
I can't. Oh my God.
$11,000.
What?
Yeah.
What does that even mean? That's
Yeah.
insane.
So yeah, the rates are out there, but don't let, things fool you. And that's of course dependent on like different, sales prices and the down payments and things like that. So that was on a 5% down 15-year mortgage. So it's expensive, super expensive. The rate for
That you have to like, sometimes you have to pay for rates and like, depending on, you know what I mean? Like that is just that. I just feel like that is just such bad marketing, like, or headlines that people.
It's points. Yeah. Right. I mean, it's not, I wouldn't say I mean, it could be conceived as, bait and switch, but, with everything, a lot of people claim no closing costs or no fees or, for your mortgage. But honestly, Ashley, nobody works for free. How
Well,
would any company stay in business if it's quote unquote free? Okay. So they're building it in somewhere. They're building it into the pricing. So that this same 1.99 rate is costing, $11,000 on this loan, but a 2.875 rate is costing nothing. You know what I'm saying? So, and the difference in price in that, so you're at, for that 1.99, you're at just a payment of $1753.27. All right, that's for your principal and interest on 1.99. Okay, so let's just say 1750 to make it round numbers. So if we were to then go to change that to just a 2.875 rate. I'm just kind of throwing numbers out here just to kind of give you a scenario. Actually 2.625 because that's kind of going 15 right with no cost. You're looking at 1873. So it's like a what, $80 difference in payment. Is it worth it? No. And if you take that $80, let's just say $80 times 12 months times 10 years, that's $9,600. So you're still not benefiting from getting that low rate. Some situations it may not cost that much because like I said, I was doing a 95% loan to value, which is higher risk. So, but yeah, it's definitely not bait and switch marketing, but it's definitely a teaser because normally you don't see 1.9 on a rate sheet ever. I've been doing it 17, 18 years and I have never seen a 1.99 or 1.87 on a rate sheet ever in my entire life. So some people may want to pay to get that done. If you have a, like I said, each scenario is different, but that just kind of gives you like a ballpark, like a scenario, like the difference between the two. So.
Yeah, and I always listen, like if I'm ever putting a rate out there or I'm saying, hey, look at what's going on in the market, whatever, it's not coming from anything that I get on my own. It's coming from like you, for example.
Right. Yeah.
Because I am a real estate agent. I am not a mortgage broker. And
Right.
so, and I feel very, whenever I see other agents doing that, I'm just like, where are you getting that? And it's story,
Yeah. Yeah, it's definitely, you definitely want to dig, if it seems too good to be true, sometimes it usually is. So that's, like I said, it's just different scenarios will be different, costs, but yeah, that 1.99 is definitely not free. Okay. You're paying for it in some way. So
you heard it, folks. Horses
yeah,
mouth.
for sure. Yeah. In rates last week, rates ticked up.
Yeah.
It's been, like I told you, I guess I stuck my foot in my mouth last week. Nobody saw this coming. It's been in a downward rate environment for probably 3 months.
Yeah.
And due to lender capacity issues, because everybody's slammed with refinance business, not only, so coupled with capacity issues, there was an uptick in the market last week with interest rates. In addition to the FHFA, which is our government, they imposed a 0.5% cost to all refinance and cash out refinance transactions. And they did it at 7:30 at night, to where basically caught people off guard. So no, like all East Coast peeps, we're, having dinner, chilling with the fam, whatever, we didn't see the headline come across or whatever. So we didn't have time to lock any loans in once they made that decision to come to go live with that news. The next morning, the lenders had already built it into their pricing. So the people that did catch it, a lot of the people on the West Coast
were able to,
that caught it, that locked before. So the lenders are taking a huge hit on those loans that were locked that night. So they're going to have to make up for it somehow. And that they're going to make up for it with it just costing more. And not, so instead of them offering a 3% rate, they're offering a 3.25 or 3.375 to make up that difference of what the loss that they're taking. I know it's a lot to kind of chew on, understand, but it was dirty. It was a dirty move by the government of what they did, and it caught a lot of people off guard. And there's been calls to action for Congress to have that, remove that fee and all that, but who knows what's going to happen.
Okay, so there has been no updates on if they're going to reverse that, or
no.
I say
technically. No, they could potentially if they get enough heat, but I highly doubt. And what's funny is that they say it's an adverse market fee or an uncertain market fee.
Right. I've heard that.
They're not doing it on purchases. They're only doing it on refis. So doesn't make any sense.
Because like if it's an uncertain market, you wouldn't want new purchases coming in, right? Like that.
Right. You would think that they would be held to the same standard as well, and so really it's, I don't want to get on a huge soapbox about it. I could. It was a money grab by the government because all lenders are at capacity. They can have much lower rates, not much, not a 1% lower, but maybe a 0.5% lower rates. But they're keeping the rates higher so people don't send them more business. So it's a supply and demand issue. It's a capacity issue. So I have my main lenders were 24 hours in underwrite, 24 hours in condition turn time. Now they're 3 to 4 day in underwrite, 2-3 day condition turn time. So everything. So they're trying to stop all the volume coming in so they can kind of catch up and get back up to their like we talked about earlier, their service,
right,
their service level. So
there's backlog, and there's only
correct
people can do.
Yeah, there's only so many hot people that you can hire, and you know? And so for me being a broker, I have different lenders that I use for different, you know, scenarios. You know, one lender may be 4-day and underwrite, one may be a week and a half. I have one lender that has the down payment assistance program. They're 1 month, just an underwrite, 1 month.
Whoa.
Yeah. So, I mean,
you're not winning any contracts as an agent.
right.
1 month and
yeah, no, that would be tough to sell that. I mean, and that's just an underwrite. That's not conditions and anything like that. But usually with a lender, because we just closed one, you know, about a month or so ago, and they were still at a month, you know, we were able to get the title in, the appraisal in. And so when the conditions did come out, it was like one touch. We submitted it back to the underwriter, and it was cleared in like 2 days. But still, it's a month to like month and a half to get this thing closed from start to finish for some lenders. You know, some others not so much. So,
right. And I have seen on that same, you know, subject, appraisals are taking long to get done.
Yeah. Oh my gosh, we just ordered. I won't say his name, but we just ordered that today. You got the email from Morgan. The due date is September 1st.
Yeah, I saw that. I was like,
okay, so I was like, we need to let everybody know right now that what's, you know, the timeline on this, because we can do a rush. You know, we have to pay an additional, you know, $100 to $150 to pay for it to have it rushed. So we'll talk about that. We'll talk about that when we get off.
That because, you know, I mean, that's an expense that my client has to have. And so when you're doing stuff to accommodate a seller and in a situation that isn't really necessary.
Right. Yeah.
So,
yeah. I mean, you know, some appraisals are taking longer. This particular one, that was the first available date that, like, when we plug in the info, you know, and I was like, oh man, I was like, we need to make sure everybody's in the loop on this one. Because I was like, I think that due diligence is on the 28th, which it is. And so it was like 2 days after, you know, so it's just, you know.
And that fluctuates, you know.
It does.
There is a lot of activity right now in the market.
There is.
Real estate industry. And so I think people are just like appraiser. There's only so many appraisers out there.
Right.
And that's why it's just so important to make sure like everybody's talking, right? Like, why is the due diligence period going to end on this date? Is there any way we can extend it? Like, what are the questions if we do have to rush something? Because all that happens, and it's very, very hard to predict that when you're writing a contract. Right?
You don't know.
To have some flexibility with things like, okay, I know that we can give here or whatever, but I mean, there's just a lot of volume, and it's not a bad thing. It has a lot to do with, I think, in my opinion, you tell me what you think. Well, the fact that like the world was shut down for a month, and all that, that volume is still there. That need is still there. Right. It's just out a little bit further, and it's compounding along with our normal kind of demand.
Correct, 1,000%.
So it's nothing to be alarmed about. It's just something to be aware of.
1,000, right? So you can make sure everybody is completely, you know, you're upfront and honest, and can tell everybody, all right, this is what's up, you know. And so let's talk about that. Are you, since that date is going to be after, do you think we should ask for? Well, in your opinion, what's working for you? Do you think we should ask for the rush, or do you think we should ask the seller to extend the due diligence? What would you do?
And my recommendation for this particular client that we're talking about is different than I think I would it depends on the client, right?
Good answer. Yep.
And I am going to recommend that we push the due diligence out because the house is vacant. So, you know, the seller, there's no, like, the seller doesn't have, it wouldn't hinder.
They're not pressed.
Right.
No, they're not under pressure to get this thing sold. Yeah.
So, and, you know, this was something the seller tried to negotiate, you know, a shorter due diligence time period. So, you know, I questioned it, but, you know, there was nothing I can do,
Right.
but knowing that, and me and the listing agent did have this conversation, right? Like, here's what could happen. I mean, I can't control an appraiser being able to get out there. Neither
Right.
can you. And that is like something that is absolutely out of your real estate agents and your mortgage broker's control, because
Correct.
it is third party. And then, and that's how you do it. We can order everything the day you go under contract, and it still doesn't matter.
Yep.
So I think, I know I have a game plan for this situation. Would I necessarily do that in every situation? No. There might be situations where I'd say, no, let's go ahead and rush it.
Yeah.
Figure out what to do with that fee, whether I it or I pass it on to the seller. I don't know,
Gotcha. No, that's good. I mean, yeah, because you're right. Every situation is different. There could have been multiple offers and you won it because of, the quick due diligence and closing time. So you have to speed things up. So, yeah.
This one, so that's fine.
What's that?
There wasn't multiple offers on this particular.
There wasn't? Okay, good.
Do that, like we're all ethical here and want to do the best things for our clients. And, I like to take a holistic approach to everything.
Yeah.
So let's look at everything, right? Let's look at the whole picture and then kind of go from there.
Yep.
But,
Yeah.
So what else has been going on? Appraisals kind of come in. Okay, because I've seen some chatter on Facebook about appraisals being low.
Yeah, the most recent one I had came in, and it was in Chantilly, so it's kind of a hard one to gauge. The appraisal came in. Sales price was $575. The appraisal came in at $549. And the appraiser wouldn't budge. We tried to do a rebuttal. We gave great answers. And my current client, he used to be an appraiser. So he, and once again, so this is just a difference of opinion, because an appraisal, like I said in one of our other Tuesday talks, an appraisal is that appraiser's opinion of value. Now they have metrics and standards that they have to be within. Some could be on the low side, some could be on the high side for certain things for value. So it all depends on the appraiser. It's crazy. Yeah. So they ended up dropping the price to $560. So my client's going to eat the difference of what for the loan amount, because when it comes to appraisals in a purchase contract, you go off of the appraised value or the sales price, the lesser of the two. So in this particular case, they're going to lend on the $549, a percentage of the $549, not the $560 or the $575. So he's got to come to the table with the difference.
The buyer does.
The buyer does. Yep.
And I think because I had this discussion with a client and the question was, what happens if the house appraises below our purchase price on the contract? And I'm like, well, I mean, there's a couple of different options, but if the seller won't budge on price, then you are going to have to make up that difference, because the bank's not going to lend on the purchase price. They're going to lend on the appraised value.
Yep.
So if the seller won't budge, then another option would be for you to make up the cash, which means you have to bring that cash to closing. Yep. I mean, not you'd wire it or something, but
right, of course, not in a duffel bag.
Right.
Yeah, right. A big old bag of cash just to make up the difference. That's funny. Yeah, and so I mean, I've seen every option be used. I've seen the sellers lower the price to match the appraised value. I've seen them not. I've seen I have had to do rebuttal on a few appraisals probably in the last 6 months where the value wasn't there, and probably out of 10, I'd say I think two they changed the value.
That's not bad.
That's like an anomaly. I know it's 2, but it's an anomaly. Like they never change their value.
Right.
But yeah, so it is possible. If it comes in lower, then they're going to have to get another appraisal. They're going to have to go back on the market. They're going to have to get another appraisal, you know, to find somebody to purchase the house. So it's in their best interest to negotiate, to renegotiate. It really is.
And that's what, you know, sellers have to keep in mind. Like, okay, yeah, there might be a multiple offer situation and we got this great price, we're able to drive it up and now your price is at this amount.
Yeah.
Well, I mean,
if it doesn't appraise.
Right. And it's not there, then you have to make some decisions. And appraisals, yes. Can appraisers be wrong? Yes. Because as we talked about,
Right.
it's an opinion.
Right.
But at the end of the day, it's a checks and balances system. We are all in a checks and balances system to make sure that we are not overinflating, you know, the value of things. And you know, do I think some appraisers need to be held accountable? Absolutely. Have I tried to fight them before when I thought they were wrong? Yeah, I haven't been successful, and there's not a lot I can do.
Right. It's rare. It is very, very rare to have an appraiser change their opinion of value. It really is. I mean, if they completely left off a comp that just sold or something and they didn't pay, whatever, you know, if there's something that we can prove, you know, that they missed, then yeah, but 9 times out of 10, you're not getting them to change their value.
Yeah. So while it's a seller's market, I mean, it is a seller's market, right? But you still have to like be on this planet.
Right. Yeah, for sure. Yeah. And remember, value is only what somebody's willing to pay for something. So
bingo. That's it. That's what I always tell my clients. I'm like, you know what? I can sit here and pour over numbers all day long, but at, you know, somebody, if it sits on the market for however, you know, several days, that's a sign, right?
Right. Especially in this market.
Yeah. I'm like, that's a sign that you need to maybe think about a different pricing strategy, because the consumers on the market they don't see the value.
Right.
So, you know.
Yep.
But that's what's up. So.
Well, this was fun. Again, I love these. I'm having a blast doing these on Tuesdays. So, so please, if anybody, do you got anything else you got anything? Okay, cool. We can definitely wrap up, and yeah, we'll talk in a little bit about you know, the appraisal, and then I also want to get got a couple other things I want to talk to you about. So thank you everyone for joining. If you got any questions whatsoever when it comes to purchasing a home, Ashley Hannah, realtor, follow her on Facebook, Instagram, all that. She's the bomb. She's dope. And yeah, so if you have any questions, feel free to reach us, you know, send us a direct message, or, you know, shoot us an email, whatever.
And same with Angelo. He's my go-to lender. So if you are thinking about buying and selling in North and South Carolina, specifically the Charlotte Metro, make sure you hit us up. Submit any questions to us that you want us to answer on next week's Tuesday Talk.
Yep. We will see you.
Share and like our stuff, everybody.
Absolutely. Thanks, Ash. You rock. I'll talk to you soon. All right. Bye.